Hi, and welcome to the Market Alert for Friday, the 17th of October 2025. So this is crazy. Goldman stunned by regional bank meltdown. Its clients demand answers to these three questions. We are in discovery phase as no one seems to know what's going on. It's causing sentiment to spiral out of control and leak into the broader markets. So the banking crisis has once again started to emerge. Regional banks crash as more credit cockroaches emerge. And US stocks declined on the back of this as havens were bid amid regional banking concerns. So just like Silicon Bank a few years ago, the Fed bailed that out. It's a question of whether they're going to actually bail this lot out as well. So risk-off trade on regional banking woes. As I said in the alert for the last few weeks, there's something big coming. I don't think it's this actually. I think there's something else. But this just adds to the woes, it says in the headline. US reports biggest ever budget surplus for the month of September, thanks to record tariffs. That's the good news. The bad news is that 1.2 trillion in interest payments is due. That's a lot. That is a lot. It is the calm before the storm. There's just a feeling about it all, and you just have to look at the valuations and all the rest of it. We are heading for something catastrophic. There's no doubt about that. There's a lot of moving parts. Another new record for gold amid chaos in bonds and stocks. And I think that they know this, which is why we're seeing gold prices just parabolic move and silver following now as well. Crappy macro, cracks in the plumbing and more cockroaches. So yeah, I mean the signs are all over the walls, aren't they? And gold's wild rise is a sign of something bigger is afoot. Yeah, I've said it for weeks now. The historic rise in gold signals the market scrambling for safe collateral, without a doubt. I've done that personally. I'll put the cards on the table there. For the last few years been doing this because it's when you get into 1.2 trillion in interest payments, 37 trillion in debt, it's just it's going to end badly. I mean, a lot of people said, well, when's it going to end? Well, I don't know, but one thing that I do know is when it does, it will be catastrophic, and that's what we're starting to see now. We're starting to see the cracks, and as I said in the headline, the plumbing is starting to fall apart as well. And you don't get gold and silver rising. I mean, silver's been manipulated and suppressed for years. The fact that it's being allowed to move higher at the moment, albeit not as much as gold, says it all. Says it all that there is something big, coming down the line. So, and of course, they're not missing out in it in Australia. If you don't buy, you'll miss out. Weimar vibes as Aussies line up to buy physical gold. They're actually lining up to buy gold now in Australia. I wouldn't trust these banks as far as I could piss on them. And I couldn't agree more. The banks are not safe. The money in the banks is held by the banks, and it's no longer yours under the Banking Act. That's a lot of a lot of people don't realise this. This is why we got the government guarantee scheme of £85,000 in place. Because anything over and above that will be converted to crappy shares if the banks go down. Again, I don't think it's the banks so much. I may be wrong there, but the debt spiral and also, Putin and Trump are going to be sitting at the table again. The peace deal from the other day, a day later, they're still shooting at each other. It's all smoke and mirrors, So I'm just hoping and praying that the big one isn't World War III, but let's hope and pray that whatever happens over the next few days with Putin and Trump and Zelensky gets resolved. But again, the banks love war. It's how they make the money. So if the banks are going down the pan, well, how do you save it? I'll leave that one to you to figure out. Anyway, economic news, which seems rather a bit of a damp squib. Well, there isn't any today, so that sorts that out. So the market's going to have to make their own direction. It depends on whether this regional banking crisis starts to gain momentum or not. But like I say, there's a lot of weakness around at the moment. So we'll just wait and see. Right, let's have a look at the markets for yesterday. A lot of weakness around apart from the metals. So let's kick off with the Dow. So in the Dow, we got up to the 78% retracement, didn't we, on Wednesday, Thursday market down, and heading south now as well, probably heading into the region of these two lows here. There is rumour of one of the Fed members whose name escapes me. It wasn't Waller, talking about wanting a quarter of a basis point cut. If you go back to the last cut, 0.5% cut, I did say at the time, well, what happens after this cut? So we had these, the markets being pleased about that. Then we've got Trump with his tariff last week with China. Market rallies a bit. And now we've got a regional banking crisis looming. So I don't know if Santa's going to turn up this year for his Christmas rally. Because at the moment, once we get the cash market open in the Dow, which we have done for the last few weeks, there's been selling and the selling is continued. We're also below the low there as well. This rumour and snippets of regional banking crisis. If this takes hold today, you could see a lot of carnage in this sector. Let's have a look at the German DAX. Well, the German DAX has already broken the lows to the left, and now we're starting to head lower. The momentum just didn't happen on the upside, which is a shame. I was hoping we get a bit of a move to the upside, a failure, and then have the short side, but it's already starting to move to the downside. So the best thing to do is to get some downside targets in place, and there you can see we're at the golden ratio at the moment in the daily chart. 30-minute charts yesterday managing to stay on the upside, but overnight being dragged down now by the US news there. In the S&P 500, just at the 50 EMA, I suspect this is going to be taken out, and then you've got the two lows there as well. In the 30-minute chart, again, yesterday was fine until we got to the cash market. There is an exit now. Again, the fact that gold is parabolic is making people think, and again, just look at them queuing up in Australia. People are starting to see that we have got a touch of a problem, to put it politely there. There's something definitely afoot. In the FT 100, this too starting to move lower. Massive volume yesterday, so it looks like they're selling now in the FT 100 as well. 30-minute chart, this came after, sort of late on in the afternoon, and then after the close we're already below the low there as well. Like I say, I'm not surprised. And I've been talking about this for the last couple of weeks or more, that there's something underlying, because the gold price is parabolic, and that means there's something serious going on in the plumbing. Right, let's have a look at the US dollar. So the US dollar also pointing at problems, moving lower. We had that bit of a rally, said it was a dead cat bounce, and now starting to head south as well. And that's, of course, when you've got 37 trillion in debt, 1.2 trillion in interest payments, and the devaluation of your currency, and a sovereign currency at that, then we've got a problem, Houston. So yeah, that's also starting to move lower. But let's have a look at this parabolic move in gold. So let's kick off with gold. Yesterday, big move up yesterday in the gold price. So whether it's the news from the regional banking crisis or geopolitical, it doesn't really matter. I think it's financial personally. You can see how this market's moved. Let's just have a look at a monthly chart, and now you can really see what's going on. I mean, we go back to the breakout here in 2023, October 2023, and then even just this part of the year, this year or last year, where are we, to March 2025, and since then, apart from a consolidation phase through the summer, as I mentioned during the recordings in the summer, wait till we get to the end of August, and then we're seeing the market move. And that's just a seasonal thing. That's nothing, any psychic ability or anything like that. It's just that's the seasonal pattern, and that's what you see now. And this will go till December, if it follows the seasonal path, of course. But yesterday, you can see that move to the upside. They've tried to slam the price overnight. The buying's come in, and now we're starting to move back, and I suspect we're going to take that high out today, particularly if we get more news with regards to this banking situation that's developing. Meanwhile, in the silver metal, making a new all-time high as I actually record, I would be happy with this getting through $60 and staying there. That would be ideal. 54.45, that's a big ask. I'm not expecting that over the next couple of days, but over the next 2 or 3 months would be ideal. And that is looking very nice. And of course, if the gold runs out in the retail sector, then people will go for the poor man's gold, which is silver, despite the fact that it has an industrial component to it. 30-minute silver, choppy again overnight, but again buying coming in to support the move at the DP and just through yesterday's high. We could have a bit of a pullback. That's always likely because these parabolic moves, as you see in the daily, they do need to sometimes pull back and breathe, but it just depends on what these cracks are going to open up and reveal to us all. So have a look at the gold-silver ratio. And I'm surprised by this, to be honest with you, because silver is moving, but it just goes to show how powerful the moving gold is when you've got the gold-silver ratio showing green bars. So, yeah, and it's still at 80. I mean, I've been hoping this is going to get down towards the 30 level over the next few months, which is highly likely. But, again, there's no rush. There's no rush. It's heading in the right direction, but this is just a bit odd, to say the least, that we've got these 2 days of gold-silver ratio moving to the upside because of the strength of gold. Right, so a quick look at yesterday's trades before we conclude. So yesterday the market opened and sailed to the downside, and I suspect we may see this morning as well. So price is then finding support and moving back to the upside. There was a spike here. I don't know what this was. I did have a look for the news, but I couldn't find anything. May have just been a buy order or a move to just bring in traders to move to the upside. And then eventually we get the downside once more. And then we go back to the upside. So a bit choppy yesterday. And then through mid-morning, the market drifting back with the Dow futures, then moving back with the Dow futures. And then, of course, in the afternoon, the Dow moving lower, as does the DAX, but not at such a great percentage as the Dow. And then the meeting between Zelensky, Putin and Trump, not all three in the same room, of course, was enough to send the market to the upside, and that's where the spike came in gold as well, which is slightly odd because you wouldn't expect that to be the case when there's a potential to actually create another ceasefire. But we know that ceasefires, bankers and war all tend to work together. It's like a smoke and mirror situation. Oh look, we've got a peace deal, but don't worry, we'll keep the war going. Because the banks need to make money in order to recoup these potential losses from these high interest rates and the bonds that they've held since we had the quantitative tightening a few years ago. So yeah, there's the pattern for yesterday, market moving back. But what's important is where are we overnight? And you can see that we've still got a problem, Houston. We're already below the low, aren't we? We've got to be, yeah, already below yesterday's low. Yeah, we've seen that already in the other charts. Below the 200 as well. Let's see what happens when we get to the S1. The other thing is to keep an eye on the S3 if the market does sell off, because you're likely to see some sort of profit taking at this level. Right, so that's it for this one. Let's see what happens during today. It's the end of the week, so have a great weekend. Have a great day as well. And as ever, thanks for watching. See you in the next one.